Okay, please go to your note on page 21. Please finish transaction 2 and transaction 3. Transaction 2 and transaction 3 on your page 21 and 24. After you analyze transactions for your transaction 2 and 3, don't forget, record these 2 transactions on your 2 accounting books. So don't forget to record it on your first accounting book, page 24. Post to your second accounting book, page 25 and page 26. Okay? So finish transaction 2 and 3. After that, record on 2 accounting books. So take your time. 5,000 times 12%. 12% for 1 year. 12%, that's for 1 year. So 5,000 times 12% is the interest that SU for 1 year. Right now is October 31st. So how long the time passed? 1 month. So 1 month is 1/12. Okay? So you got the interest is $50 for 1 month. So October 1st to October 31st, 1 month passed. 1 month passed, you should have $50 interest incurred happened. Okay, so you should understand how to get the interest depends on the time. So usually percentage for 1 year. So 12%, that's for 1 year. Okay, so this is for your second transaction. Second transaction, what happened? Remember, we are on October 31st. So October 31st, what happened? We don't record October 1st anymore. Why is that? October 1st, we did already. So October 31st, 1 month interest happened. Okay, so what we are going to do, we try to record 1 month interest occurred, happened. Okay, so 1 month interest, how much? $50. So $50 is 1 month interest. $5,000 times 12%. That's for 1 year. 1 month is 1/12. 1 month. Okay? So $5,000 times 12%. That's for 1 year. But here we are only past 1 month. 1 month is 1/12. Okay? So we got 1 month interest is $50. Okay, so that's why I have interest expense occurred 1 month. Did you pay? No, not yet. So we told them we owed 1 month interest. Okay, so here just want to show your interest occurred 1 month. Did you pay? Not yet. We didn't pay interest yet. Okay, any questions for this one? Transaction 2 is quite common, normal situations we have. So you will find out that kind of situation since today to your whole life. Hi, Hank. 是的，12%是不是会计问题？是金融 finance 普遍就是这样的使用习惯，讲12%，讲10%，讲5%，没有特别讲，一定是指1年。所以我们这边没有讲，就是1年，因为这个是现实生活就是这么使用的，可以吗 ？OK， so 12% 1年，那你欠多久？1个月而已啊，所以我们要算1个月的利息。OK， any questions？ Make sure you understand it. Remember chapter 3. Chapter 3. We did last day job. First day job we did before already. So that's why we focus on last day, October 31st. Okay? October 1st we did in your chapter 2 already. Any questions for transaction 2? Then, how about transaction 3? Transaction 3, what happened? Accrue happened already, right? Expenses. Your expenses happened already for what? For your employees. So here I told you salaries and wages happened for 3 days. Okay? Salaries and wages occurred 3 days. So what happened? It means employees work for you 3 days. Okay? So employees work for you 3 days, but we haven't recorded yet. Also, we haven't paid their money yet. Okay, so they work for you, but you haven't paid. Then salary. Okay, so what should we do? Remember, today is last day. Chapter 3, we focus on last day. So on October 31st, we try to record what happened. Okay, so what happened? They work for you 3 days. You didn't pay the salary yet. Okay, so we should tell them what happened. Salaries and wages expenses. $1,200 for 3 days because 1 day $400. $400 per day. So 3 days $1,200. So here told you employees work 3 days. Okay, so that's why your expenses incurred happened. Did you pay? No, you didn't pay. So salaries and wages payable $1,200. What is that? You didn't pay, so you owed employees salaries. Okay, any questions? Since you understand these two transactions, just recall on 2 accounting books. That's it. Okay? So 2 accounting books. So far, any questions? No problem? So first accounting book, journal. So did you find out which date? Always last day, because chapter 3 we talk about last day. We did the things only for last day. So last day we told them interest happened 1 month, but we didn't pay interest yet. Okay, so 1 month interest occurred, but haven't paid. Okay, any questions? So remember, today we recall extra transactions. We recall something happened during this period. Okay, we don't focus on first day anymore. Why is that? First day is for chapter 2. Then transaction 3, what happened? Employees work for you, but you didn't pay the money yet. So employees work 3 days, but you haven't paid. Okay, any questions? So you should understand what we are doing. We try to find out the 10% transactions. We try to find out something happened, but we haven't recalled it yet. Okay? Any questions? Then post to your T account, right? So, what's the transaction 2? Interest expense. Interest expense, debit. Interest payable, credit. So let's go to interest expense on your page 26. So did you find out? Page 26, here on last day, we have 1 month interest. Okay? Also, did you pay? Not yet. So your credit, go to page 25. 25, yeah. Did you find out? On last day, we owed 1 month interest. Okay? So that's for your transaction 2. Any questions? So remind you again what we are doing in chapter 3. Chapter 3, we focus on last day. For that 10% transaction happened, but we haven't recorded yet, okay? So we don't focus on first day because first day, that's for chapter 2. Okay, so transaction 3, what happened? Remember? Salaries and wages expense incurred, but we haven't paid to employees yet. For the 3 days, 3 days salaries, $1,200. So pause to your second book. So go to page 26. Page 26. Did you find out? Here, we have on last day, $1,200. You employees work 3 days. Okay? Did you find out here we have $4,000? From where? Chapter 2. If you remember, we did that in chapter 2. So that October 26, $4,000. We did chapter 2. Okay? So chapter 2, for the 90% we did. Chapter 3, we focus on the 10% we haven't recorded yet. Any questions? Okay, so credit is we still owe them money, right? Salaries. So go to page 25. Page 25, what happened? Here you told them on last day you still owe them money, salaries. So you owed 3 days salaries. Okay, any questions? Any questions? That's for first group. It's more easier than the second group. So right now we have to go to second group. So make sure you understand what we are doing for the first group. First group, something happened. We just recall it now on the last day. Okay? Any questions so far? Then, let's go to our second group. Before we go to a second group. Okay. I'm not sure whether you understand it or not, but let's try it. On your slide 43, we've done interest 1 month, $50, right? So $50 1 month, that's for your transaction 2, right? So this one is for your transaction 2. For your transaction 2, we focus on last day. But still, something will happen later on, right? So what kind of things happen? You should pay the money back. When you should pay the money back? After 3 months, right? The note told you. You promise pay the money back after 3 months. So after 3 months, which date? January 1st, okay? Here, you just pass 1 month. So did you find out from October 1st to October 31st? Here, only 1 month. But eventually, you had to pay the money back, right? When? January 1st. 2 months passed. So we have to wait 2 months more, right? So finally, after 3 months, you had to pay the money back, right? How much money you should pay? Principal, the money you owed. Also, you should pay how much? Interest. For how long? Totally, you should pay the interest for how long? 3 months, right? Because from October 1st to January 1st, totally you promises you pay the money back after 3 months, right? So after 3 months, here you should pay the principal, $5,000. So principal, the money you owed, $5,000. Also, don't forget, total interest you should pay is 3 months. Okay, so don't forget, after 3 months, you have 2 money you had to pay. First money is what? Principal. So you had to pay. First money, pay cash, $5,000. That's the first money for principal. Second money you had to pay for 3 months interest. Could you tell me 3 months interest, how much? Cindy, 3 months interest, how much? $150, right? Because 1 month, $50. 1 month, $50. 3 months, of course, $150. Okay? So total money you should pay is these 2 money. So far, any questions? No problem? Okay. Then, what's the journal entry we use to record it? October 1st, you buy equipment, but you didn't pay the money, so you owe the money $5,000. October 31st, 1 month interest occurred, but haven't paid. Right? So what should we do? We record this situation. So we have interest expense, 1 month, $50. Interest payable, $50. Right? But after that, continue your life. Continue your life. After 2 months, eventually you have to pay the money back. So, what happened? January 1st, next year. Still have 2 months passed. So after 2 months passed, eventually we have to pay 2 money, right? So first money is what? Don't forget. You had 2 money have to pay. First money is principal you had to pay, right? So don't forget, you had to pay. First money, pay principal. $5,000. Second money you had to pay is what? Interest. Three months. 3 months, how much? 1 month, $50 for 3 months. So totally you had to pay is $150. Okay? So let's look at focus on principal first. You pay cash $5,000. So that made your cash decrease, right? So pay principal $5,000. First effect is what? They made your cash decrease $5,000. Could you tell me what's your second effect? Do you owe them money anymore? You don't owe them money anymore. So which account we used before? Right here. Notes payable, $5,000, right? So here, we told them $5,000. We don't owe them money anymore. At the beginning, we use notes payable. We owe them money, $5,000. Right now, we don't owe them money, $5,000, right? You don't owe them money, $5,000. Which account we use at the beginning? Notes payable. So your liability, notes payable, should be decreased, right? Because you don't owe them money anymore. So your notes payable should be decreased. Okay, any questions? No problem? How about interest? You pay 3 months interest, which made your cash decrease how much? $150, right? Okay. So for that interest, you pay 3 months. So of course, my cash decreased $150. So far, any questions? Next one, more complicated. So far you have to make sure you understand it. What's the second effect? Do you owe them interest. No more, right? So second is you don't owe them interest anymore. Don't owe them interest. But look at the information here. Before, which record told you you owe them interest? Which one told you you owe them interest before? Here, right? Interest payable $50. So on your records, you just recall 1 month interest only. So here told you you don't owe them interest, but just for 1 month, $50. Because before you just dig it for 1 month, you just record interest for 1 month. So your interest payable decrease $50 1 month. So far, any questions? So on your accounting book, you don't owe them interest anymore. But what's wrong? You totally pay 3 months interest. Your liability just decreased 1 month. What else for the 2 months? Have you recalled 2 months interest yet? Not yet. So what should you do? Recall it now. So you have to tell them, you still have 2 months interest occurred happen. Did you recall yet? Not yet. So please recall it now. So the third one is what? From October 31st to January 1st next year. For this period, 2 months interest occurred. But haven't recalled yet. So what does it mean? The same. Happen, haven't recalled yet. So what should we do? Recall it now. So you should tell them, interest expenses happened for 2 months. 2 months, how much? $100. Okay, that's it. So that's why you have to figure out what did you do, what you haven't done yet. So for the part you haven't done, you have to make sure you dig it on last day. Any questions? Take a break. Later I'll give you time to practice. So take a break.